Hi, Mark Gordon with GoldenTicker.com here on Wednesday, March the 2nd, 2011, and I want to talk about gold. Gold hit an all-time high today, got up here to $1439.90, almost $1,440. And you can see that gold kind of triple topped here, hit a high of 1424 here in November, and then pulled back to the 50-day moving average, this blue line, held the line there, rallied back up to a new high, 1430, pulled back again to the blue line, held there, rallied up to 1423, and then pulled back here, scaring out a lot of investors, short-term people. Got all the way down to 1308, held down there, broke through this green dotted line, which is the 100-day moving average, very scary. But we've been rallying ever since, all through February here, and now into March, hitting new highs, breaking out of this sort of rounding triple top formation. So this is very bullish for gold. Looking now at a weekly chart, you can see the breakout. You can see this sort of cup formation, sort of a V-shaped cup, and breaking out here into new highs. Looking back, we can see that the start of 2010, gold was trading in the $1,100 range, pulled back as low as $1,044 underneath some key moving averages here, and then rallied up to a high here. That's almost a 40% run. Here, so that's quite substantial. And looking now at a monthly chart of gold, you can really see the uptrend here, which got going as at around 2001. Back here in 2002 was in the $300 range, and now has moved up to over $1,400. That's a fourfold move here. And you can see this upper top line here of a trend. And we've touched it 3 times, and projecting out, that would put gold probably in the $1,600 range if it goes back and tests that high again, which it probably will. Now pullback should take us to this blue line, which is the 10-month moving average, which it's held here for the last couple of years, and that currently is at about $1,330 and moving higher. So expect pullbacks. We could pull back as much as $100 and still be holding this uptrend very nicely. You can also see that extreme pullbacks happened one time back here in 2008 when the general market collapsed. There was panic in the air, and it took us all the way down to this 40-month moving average here, which it held very well. So despite all the day-to-day volatility of gold, gold has remarkably held a very, very strong uptrend here for the last 10 or 11 years. Now things get real interesting when you start comparing gold to other things. Like here's a chart of gold versus the US dollar, and you can see here back in 2001 the US dollar versus gold was at around $2, low $2 range, and now we close today at 1878. That's almost 1,000% move in the last 10-12 years. And what this is basically showing is a collapse of the US dollar against gold. And this is something they're not really going to tell you on CNBC, or Jim Cramer won't be saying this. And to help give you a better idea, this is the opposite. This is the US dollar versus gold. The other chart was gold versus the US dollar. So you can see the collapse, the precipitous fall since 2001. Here's another scary chart. This is the S&P 500 versus gold for the last 10 years. And you can see that it's, stocks have collapsed against gold. They've lost about 80% of their value. So if you would have held the S&P 500, you would have lost 80% of your value. If you would have held gold, it would have gone up 4 or 5 times. Now holding stocks for the last 10 or 12 years has been a wild, wild ride. You can see here in 97, 98 we ran up substantially, and then in 2001, actually March of 2000, we started a precipitous fall, taking us all the way back down here. S&P 500 losing 50% of its value. The NASDAQ actually losing 75, 80% of its value in a few years here, and then rallying back up here, double topping here, pulling all the way back down here in the panic of '08. Bottoming here in early 2009, and then rallying back up. So You can actually go back to 1998, 1999 to get the same prices we're still at on the S&P 500, and a lot of volatility. And to think that you can hide out in foreign currencies, that they're stronger than the dollar, they might be a little stronger. Here's the euro versus gold here, with a losing 2/3 of its value since late 2003, and just collapsing and still heading lower. And here's an interesting chart. This is the IYR. This is an exchange traded fund that tracks real estate here in the United States, and you can see through 2004. Up until midway through 2007, real estate was holding up very well against gold, and this was actually a period when real estate prices in the U.S. were really going up, especially here in California, but not against gold. They were holding their own though. But then in mid 2007, just collapsed, and this is right here. This is the real banking crisis here, and the collapse of the stock markets, which brought the value of real estate against gold almost down to nothing. And we've recovered somewhat here, but still losing 2/3 of its value since mid 2007. So real estate has not been a place to hide as well. So it looks like gold is really your best option for preserving your purchasing power, and there's really nowhere else to hide.